The founder and CEO of LG Insurance Agency, specializing in high net worth individuals, Aaron Levine.
I wanted to help anybody that was needing help. I opened my doors with no clients.
9 out of 10 people. You're making $1 million a year and you have no umbrella.
Preventing a loss is much better than having to restore yourself from that loss.
What creates wealth can actually take wealth away.
Your house burns down tomorrow. How much money do you want?
Each financial decision is not in a silo by itself. It has to be looked at and how it relates to something else in your plan. And most people are not looking at the big picture.
This is John Smallwood, and I am back on the Money Isn't podcast. I'm excited today because I have a wonderful guest. His name is Aaron Levine. He is the founder and CEO of LG Insurance Agency, specializing in high net worth individuals. And he's also the host of the Luxury Group Insurance podcast.
The Who You Work With Matters podcast.
It's not the way I saw it on the YouTube channel.
I think that YouTube episodes are under our main header, under the Luxury Group, kind of combined. I think we need to maybe separate that out now.
We might have good podcast people for
creating some new
to
opportunities.
Yes. So, welcome.
Thank you.
I'm excited because I believe in wealth management, people are very vulnerable, meaning they're saving money, they're accumulating business wealth, they're doing things that are really, really cool, but you could drive a truck through their asset protection side. And I believe some of the insurance side is the cheapest, most effective way to gain asset protection.
Right.
So that's something I want to go down. But before we do that, you're a big golfer.
Oh, goodness.
Right?
Yeah.
How often are you playing?
Not often enough.
Nobody does. Everybody, even Tony, who's cameraing this right now, doesn't golf enough.
It's
right?
never enough. Never enough. I was out yesterday. It's June now, and the weather's finally turned. It's beautiful out here at the Jersey Shore, and I played yesterday. It was great. Got a little color on my skin and a little wind in my hair. Yeah. It's great to be outside.
How'd you play?
I played often. We played okay. We had a member guest tournament at one of my buddies' clubs over at Jumping Brook Country Club yesterday. A 2 better ball tournament, and those are always the best way to play. Yeah, those are always a good time. But yeah, so I enjoy playing quite a bit. I'm a member at Beacon Hill Country Club for the last 10 years. I think I joined when my first daughter was being born, so she would have a club to go to. So it's a good social game. I play golf for the social aspect of it, right? It's a form of networking. Yeah. It's a way to host friends, clients, prospects, opportunities. And it's just a great way to just connect with people, right? I don't go out and play golf by myself. I'm not that guy. I like to travel to play golf. But if I'm traveling with the family, I'm not playing golf because I'm not going out by myself. So that's just not me.
10-year-old.
I have a 10-year-old.
And what else?
And a 7-year-old. I have 2 girls, 10 and 7.
10 and 7. That is great ages, right? That is, wow.
And my wife and kids just added a puppy to the home suite this past weekend. So now,
what kind of puppy?
We have a Labradoodle in the house. So
Cute
she'll
dog.
be about 20 pounds when she's full grown, and the kids are super happy.
What did they name her?
Her real name is Artemis, right? The goddess of the hunt. My 10-year-old is very into Greek mythology, and we wanted a goddess name for her. But they shortened it to Misty. So her call name is Misty. Her hunt name is Artemis.
That's pretty cool. I was going to bring the dogs in today, my 2 dogs, but we decided not to.
Do they disrupt the podcast?
Well, they like to be on my lap. It's like, it was one of those
climbing through the
things.
lights.
I think it's interesting because I'm on the other end of the world with that, right? Because I've got 4 kids. And my 29-year-old son just had a baby. So I'm now a grandfather, which changes the entire perspective of the way you think about stuff, right? And they say when you have kids, it changes the way you think about things.
Sure.
And then you have grandkids, and it completely changes the way you think about things because you can't actually believe that the kids that you produced are actually now you. They're parents. And that's incredible, right? Smallwood Wealth Management is the lead sponsor of this podcast. You have an opportunity to have a free, no obligation conversation with one of our qualified advisors. Go to smallwoodwealth.com, schedule a call, or call us at 800-797-1000 and get on our calendars. So I wanted to just jump into the human side of this thing, because your podcast is about the who's, right? It's about connecting people and understanding that, we're in the podcast environment where there's millions of podcasts that you can consume on a daily basis. We're in the AI world, right? We're in social media world. But everything, it really connects from putting a team together that are the proper who's. And the way I define a who is somebody that enters into your business that you don't need to train them. Okay. You don't need to tell them to be motivated. They show up, there's a problem in the business, there's an opportunity in the business, and you find the right who, and now you can actually address it, maximize it, and get full value from the who. Otherwise, the person that you hire, you have to constantly micromanage and tell them to show up on time and to be here. They're not a who.
Well, so it sounds like you're speaking from the who, not how perspective,
Correct.
right?
Dan Sullivan.
From Dan Sullivan, Ben Hardy.
Yeah.
From that perspective of the who, not how, is bringing in the right who's to take those opportunities off your plate and hopefully do better with them. I also go into, we have who's that have been in our lives forever, whether they're mentors, children, parents. Everybody becomes a who. And, I hate it when people say, I have an idea, but I can't tell anybody about it, right? Like, well, you don't have anything at that point.
What are you afraid of?
Right? You have to, being able to share openly with different people. And that's what I get out of podcasting. That's what I get out of these conversations. I learn so much by sitting here with you and with all my other guests. And whenever I'm a guest on another show, I learn more doing this than anything else that I could possibly doing in my day, right? So it's all about the who's. And like you, I'm a connector. I love being with people. I'm in a people business. You're in a people business. And at the end of the day, money will show up by being a good connector and being open and honest with everything that we do.
Exactly. And I think one of the things I think that's most important in business, right, is from a success standpoint, is the actions and the activities of a successful person. Like, you have people that are sitting here and it's like, it's hard to do this or it's hard to do that. It's always going to be hard, right? It's because you're thinking about it.
It doesn't have to be. You have to make it fun.
You have to make it fun, but you have to remember that if you're thinking about it properly, you're thinking that it's easy, and you're thinking that we can achieve this, you're going to go in the right direction, and then you're going to take action. Right. And you see, I think your company has over 3,000 households that you're working with at the moment.
Yeah, we have over 3,000 households that we work with, individuals, families, businesses, from everywhere. Like, I started the business I got licensed in 2007 while I was in graduate school, right? Still trying to figure out what I want to do
Where'd you go to
with my
school?
life. I went to graduate school, got my MBA from Monmouth University.
Cool.
So still trying to figure out what I want. I still don't know what I want to do.
When you entered into
up.
that realm, what were you thinking versus when you came out?
I needed to learn something. All right. Undergrad at Syracuse University was great. I had a good time. I'm like, after a couple years in the working world, I'm like, I got to go learn something. Maybe I can do it differently.
My son Chris graduated there.
And, I went to grad school and still, fucked around just as much, and had a good time. And one of these days I'll finish paying off my graduate debt, but my loans are so cheap, so we'll keep it rolling.
And my daughter just got accepted to Providence's 5-year MBA program.
That's
She's
great.
going to be a senior, so she gets to extend for another year.
She gets to extend the party for one more year.
This is good. She just got back from study abroad. She was based in Prague. She was all over the place. I'm like, we want to come back as you guys. Because I didn't do that when I was 18, 19, 20.
That's so,
Right?
I didn't either, and it's phenomenal. I hope those opportunities, I can afford them for my children to have those same experiences, right? That's one of my goals of today, is to make sure that, we can build that generational wealth so my children can enjoy those luxuries and be able to do those different things and do things that I never did.
Yeah, I think, there's the dream of you want your family, your kids, your grandkids, the generations below you to do better than you did.
Mm-hmm.
And you want them to learn from your lessons and your mistakes and to compound the good stuff
right.
and eliminate the bad stuff, right? Because it's the bad stuff that, you can go back in history, and the struggle of wealth is a really interesting thing. And it's
right.
like what creates wealth can actually take wealth away. And I think what's really interesting, and I don't have the article, but in the early 1990s, there was an article called The Slippery Slope of Wealth, as I recall it, okay? And it was either in Forbes or in a magazine like that. I've looked for it. I've never been able to find it. We had a printout of it, and I'm sure it'll show up now because I'm searching for it, right?
It's going to show up on your phone. It's going to be the first thing that you see when you open your phone.
But it highlighted the 100 richest families
okay.
in New York City at the turn of the century, 1900. Where are they today?
Is that like the lottery effect, right?
And they're not there. I think one or two families was still on the richest families, and they didn't move, right? It wasn't that they moved, right? And one of the analogies and one of the concepts in it was the way they had drafted trust documents and the way they had programmed people to think was, invest your money back in railroad bonds and canal bonds because that's where we made the money.
Right.
And those are the exact things that took the money away. And they didn't put the art of and the joy of work in building a business into their families. And those that are still on the list today did, because they love to create wealth and they love to create businesses. And to me, it's about connecting people together. But there's a whole series of things that were holes. It's not just I invested in bad stuff. It's there was protection issues. There was all kinds of things that I think in the business. And the thing
it's
that
the
I
gambler
always
that thinks they can keep winning and winning and winning against the casino.
double down, right? It's going to get better. It's going to get better right now. I'm going to make everything up in this last trade or this last piece. And sometimes you do. And that's the crack that keeps coming back, right?
Right, but that's what keeps me going, right? So it's, I'm always looking for what's next, right? What else can I do differently? So I'm motivated to continue to explore, to continue to learn, to keep trying to evolve the business and myself, right? Because I love to learn. I love to keep engaged in learning, which then I can hopefully bring down to my team members, and keep them engaged with different ideas. So I have some long-term team members that have been with me for 14, 15 years, and I love being able to try to keep them engaged because work gets stale, work gets boring, right? How do we keep it interesting? We have to keep doing things a little bit differently. And my brain works at 3 o'clock in the morning, and emails get fired out at 3 o'clock in the morning of what we're going to do. And
you have that problem too. Oh, that's a good problem. Yeah.
The brain works wonders in the middle of the night, unfortunately, when
you
I have to wake
you're like,
up.
Oh, wow, that's so clear. Right?
Yeah.
Yeah.
Yeah, it's a terrible problem to have. It's a great problem to have, but my best ideas come to me in the middle of the night.
So 22 years in the business, basically.
More or less. So I was in grad school and trying to figure out what was next. And I was doing real estate, got my real estate licenses. I was doing grad work. I'm like, my dad's like, just get all your licenses now while you're in school mode.
Yeah.
So I went and got all my licenses.
You're in study mode.
Passing a test I could pass any state exam blindfolded.
Correct.
So it was very easy. Ask me to take one of those exams today, probably not going to be so easy to study and remember all the laws and requirements and dates and numbers and everything that goes with it. But back then it was super easy. And as I was trying to figure out what I was doing, it was 2008. Real estate is what I wanted to do because real estate's so much sexier than insurance.
And then nobody was buying.
And then I went broke.
Yeah.
Then I had no money. Then I had to put a tenant in my condo, move back in with my parents, and figure out what next steps were. And that's where it ultimately is like, what's recession proof? Or now we call it recession resilient, right? Insurance. Recession resilient.
Recession resilient.
So much cooler than recession proof, right?
I've never heard that.
Right. So recession resilient is the insurance industry. So is alcohol. But I went into the insurance business full time, worked for a company part time, figured I can do it better by myself. And I opened my doors, right, with no clients. Right. So this comes back to what we were talking about before.
Love it. No clients.
Is I wanted to help anybody that was needing help. And we still try to help people as little as, if somebody needs a small renter's insurance policy, well, that's an opportunity for us to educate them on what their risks are associated with renting an apartment.
Build a relationship.
Because you see buildings that burn down and people left in destitute with nothing.
No place
when they
to go.
could have spent $140 on an insurance policy and then gotten their $20,000 worth of stuff back after they were moved out by displacement of fire or water or whatever else.
And temporary
it might be.
Relocation money and all kinds of
Very
stuff.
expensive.
Very, very expensive.
Yeah.
Short-term rentals are not cheap.
No. So we so I always liked helping, small individuals out. And obviously we've moved significantly further upstream, but I still don't shut that out. You find a lot of agencies that won't talk to those smaller clients, those smaller prospects, because they're not profitable.
At $140 of annual premium with a commission that's...
I could never sell enough.
You can't out-volume that one.
No, you can't out-volume.
I mean, if you're Geico and you're on TV, maybe you could.
That's
do
a different.
It,
They're in a different.
And
they're in a different
delete
game.
Geico from this thing. I don't want to promote them in any way.
We don't have to delete Geico. It's funny. So full circle, right? Geico was our biggest competitor for many, many years. They still are the #1 auto insurance carrier, and they were always a direct-to-consumer company.
Correct.
Geico has an independent agency channel that they launched about a year ago, and we're now a Geico agent. So the funny stories are in some of my ownership groups is, now that everybody's becoming a Geico agent, we all have to go back to our Facebook posts, bashing the gecko and the cavemen from many years ago on Facebook posts about how bad they were, because now we're like, we're coming in, we're buying in.
Which goes to show you, like, if you kind of pan out a little bit on that, they were vehemently against the agent,
Yes.
even in their advertising.
Oh yeah.
And they're like, oh, there is value, because the agent is the person who is actually providing the education. Because when you call a call center, the person's like, what would you like? It's an order, number 1 or number 2. Mm-hmm. At Brennan's, my favorite sandwich is number 26, right? So like I walk in and I order that.
Which one is that?
It's the grilled, it's the chicken corn salsa wrap on a spinach wrap.
Sounds
It's
delicious.
fabulous. I'm hungry now. Let's go get one. But it's like that order is what gets people in trouble.
Sure.
And that's the thing that I see. I see very, very successful people come in, and we build this concept, which is the wealth curve blueprint, right?
Okay.
So we have a personal blueprint, which is, everything that you're doing personally. And one of those things is liability coverage, like an umbrella, right? 9 out of 10 people have 0.
Right.
And then I look at it and I go, well, you're making $1 million a year and you have no umbrella. And that same mindset is actually in their wealth curve business blueprint.
Okay.
And they're vulnerable inside the business also from many, many, many different angles, and how they own their companies and all these things are really crazy. But it's like the simplest thing is not being deployed, such as an umbrella.
Right.
Right? I mean, like,
So
that is the
that's-
cheapest thing of asset protection I've ever seen.
What is our insurance mindset, right?
Yeah.
Insurance mindset in general is insurance is an expense.
I don't need it.
I don't need it. It's not going to happen to me. Human nature says it's not going to
Happen to
me.
that guy over there.
Right?
Not
I don't
here.
need it. It's an expense. We don't need to spend the money.
Right. It's a waste.
Right? But shift the mindset to insurance as a risk transfer and wealth preservation vehicle. You think about it differently, right? And a good umbrella policy, and I have to emphasize the word good, is because there's not so good umbrella policies out there.
Define what's not good. Let's
not good umbrella.
Let's start there. Yeah.
That's great. So there's 2 parts to an umbrella. We'll call it A and B, right? In simplest terms, there's part A and part B to an umbrella. A not good umbrella has part A only, liability coverage for $1 million to $5 million, whatever it is, right? Cheap. Typically over auto, probably don't have the full auto schedule covered under there. Maybe missing a home or 2, right?
Missing the jet ski.
Missing the jet ski, right? Where are the liabilities? You want to add them all because, again, like, oh, we don't need to add that. It's an expense, right? It's the millionaire that buys a motorcycle that gets state minimum liability on his motorcycle because it just wants cheap insurance.
Right.
Well,
I'm only going to drive it on the weekends.
You have $500,000
once a weekend
underlying on your auto. Why wouldn't you do the same on your motorcycle? But anyway,
then there's a gap, right?
The umbrella, right? What are you more likely at risk of? you causing the accident and being liable for it, or somebody else causing the accident and them not having enough insurance to cover your issues that might arise?
I would think both sides are really big. I think
Both
the
sides are
uninsured.
important.
I think the uninsured is really
The uninsured motorist coverage, that part B, is my favorite part of the umbrella, because I want to protect myself and my family from someone who doesn't have insurance. And if you look at some of the data out there today, you know, maybe not so much in New Jersey, but if you go to some of our poorer states in the nation, there's an epidemic of people not buying any insurance. So your chances of having an accident with somebody that doesn't have insurance are much greater in other parts of the country than they are maybe here in New Jersey, where we have, you know, a little bit more wealth and people are buying insurance because they're required by law. But, you know, you go to
But
a
I've
state,
seen those where they're like $50,000 liability limits
Yeah, that's not
on people's
good.
stuff. And it's like, you're driving around with this?
That's
like,
the
you
expense
should
mentality.
Uber home. You should Uber home. You shouldn't actually drive home.
Right. That's the expense mentality. I can save $100. So let's make it cheaper, not actually protect myself. You know, I have a friend, and you know, I'm waiting for his court case to finalize before he becomes a guest on my podcast. But he lost his leg in a motor vehicle accident with a senior citizen who should not have been allowed to drive. And they had an accident, and the guy had nothing.
No coverage.
And, you know, it just becomes a mess. So then now you're suing the estate. Now you're suing the landlords of the properties where the accident occurred. Now you have to drag everybody else in because there's just not enough insurance money anywhere
to satisfy
to
his issues.
satisfy losing a limb, and you know, and being that way for the rest of your life.
That's unbelievable.
You know, so it's scary out there. When you see these real stories, you think about, what can I do to make it a little bit better, protect myself better, sleep better at night when it comes down to these things.
And when I look at it, you know, an umbrella, a good one's $300 per million, maybe, maybe.
It's not expensive, depending on where you're going and how you're doing it. And we'll, you know, cheap one, get $1 million umbrella. You don't want to spend the money, let's do $1 million. Better than nothing.
Yeah.
Right? But then if you're a high net worth family or individual and you have your assets and you have larger homes and you're insured with a high net worth, a high value carrier, an AIG, a Pure, a Chubb, you can buy a $10 million umbrella for like $2,000.
Yeah. Yeah.
Not much money.
Incredibly, and what a fabulous initial stage of asset protection.
Right.
Like, start with the basics. And people are like, I got to get really complex. And it's like, if you don't have the basics,
Right.
you know, we're not going to go run the marathon. Like,
Right.
you actually can't run. Like, you know, like, let's think about this, right? And I think it's, so like, when I look at this, like, the umbrella is always the glaring thing, but like, what do you see in your practice when somebody comes to you? Like, let's just focus on the business owner for a second. They're coming to you to insure them personally, or they're coming to insure them from a business perspective. Like, what do you see as the big problems?
Again, so, you know, we don't think about certain things, and, you know, I like to talk about protecting the business owner, right? Employment practices liability. Let's talk about that. You know, what's your employee handbook look like? What are your human resource opportunities in the office? How are you managing your staff, right? Are you set up from an HR perspective? And are we insured against that? You may love your employees, but the minute you fire someone, they're turning around and suing you. Happens every time. I see it all day long. You know, things are great when they're great, but just like when you're putting a buy-sell agreement together. Oh, we're good. We get along great. The business is going to be wonderful. We don't need to worry about a buy-sell agreement. And then if you do get them to do a buy-sell agreement, getting them to fund it is another question. Right?
One of the biggest vulnerabilities in a business is either the buy-sell or succession strategy. Huge liability.
Huge liability there. But again,
you got 50, 60 people working for you, 20 people working for you, and you don't have a good exit strategy, and you don't have a good continuation, that business is gone, and those people are on the street.
Yeah.
Relatively quickly.
Right. But just, you know, so fine, the business is going great, but protecting yourself from your employees or from third parties, because we see a lot of third party lawsuits when it comes to different ADA compliance issues or vendor related issues. There's so many things that a third party can come after you for that this employment practices liability policy would protect you from. So that to me is number one. Number two is protecting yourself from cyber vulnerabilities,
massive,
right? Are you going to have $100,000 stolen from the bank or even $10,000 stolen from the bank, right? Is there that data breach? Is your data locked up, or do you have do you no longer have access to your data? Were you spoofed and one of your clients just wired $100,000 to somebody else and now they're coming after you for it because they had made a mistake, right? Are you protected from that perspective? You know, did your bookkeeper get an invoice from a vendor that doesn't really exist and they paid it for $100,000, right? Invoice manipulation is a cyber coverage.
Yeah.
You know, we don't even need to talk about fire coverage.
Yeah, I mean the basics, like
fire and liability, not exciting. I don't care about fire and liability. I care about cyber liability, and I care about employment practices liability. And then obviously we can look at the expense reduction side of it. How can we make the business safer and reduce risk from a loss control perspective? And then back into, here's how we get your insurance premiums down. It's not by running your business like a jackass and hoping a claim doesn't occur. It's let's tighten things up, and then we can use that story to get better rates with different insurance companies.
Kind of similar to, if you have an alarm system and a fire system on your homeowners, it's cheaper.
Right.
Because the odds of the fire being complete loss go down.
But it's the question that I get. Aaron, I'm going to put an alarm system in my home. Great. Good idea. How much am I going to save on my insurance? I'm like, maybe $100. Oh, it's not enough.
Yeah, because I want to pay for the entire alarm system.
Then I'm not going to put the alarm system in my house if I'm not saving enough money. I'm like, preventing a loss is much better than hoping to get the claim paid out and then having to restore yourself from that loss.
Loss prevention.
Loss prevention is huge, even from the personal lines perspective. With Pure Insurance Company, who we do a lot with in the high net worth space, they're very good locally. If you have a $5 million house or greater in our area, we love Pure to create packages and add people to their membership. They just put out an advertisement. I get it at my home, and it's loss prevention is cheaper than claims restoration.
Yes.
We don't want to go through it.
Yeah.
You don't want to be displaced from your home. That time and effort and energy that goes into getting a claim paid, even if the insurance company pays quick, you still have to repair your house. You still have to repair your vehicle damage. You don't want to do that. So loss prevention is much better from a business and personal perspective than it is, trying to have good insurance that's going to pay a claim faster. We don't want claims. Let's avoid those.
When you started in the business versus today, if you go back in time and talk to the 20-year younger Aaron, what kind of guidance would you give Aaron?
It's a great question. And so I just did a presentation. I moderated a panel at our middle school in Monmouth Beach.
Sounds like fun.
Right? So we had 6th, 7th, and 8th graders in the audience. And it was me moderating a panel of 6 professionals from Google. We have somebody that's very big in the PR space. There's somebody who's a Broadway actor on the stage with us, somebody who's a vice president, a large financial institution, right? So the question is, what advice would you give your 6th grade self?
Yeah.
That's tricky. To me, it's connections, right? To me, it's staying curious and just asking and learning, is the biggest thing. Forget about what I actually do to generate revenue, right? Maybe it is the connections are what generates revenue for LG Insurance Agency, but it's really just staying curious, asking questions. And I think if I could tell myself 20 years ago, it would be just that. And that's what I did is I started my business by networking. Yeah. I joined the Long Branch Chamber of Commerce. My family has strong roots in the Long Branch area.
Nice.
And I was able to network and start creating opportunities through the local Chamber of Commerce, and then joined and did other networking groups and other opportunities. And I still do networking groups today, even the organized ones. LaTip International is a group that I've been a part of for 13 years.
Oh, wow.
Right? Have I outgrown it? No.
Yeah.
Yes. Who
Maybe.
knows?
Yeah.
We have a good core. If you like the people that you're with, stick with it. The business does show up because you become top of mind. And if you go off and be a hermit, you're no longer top of mind. People forget about you fast.
Yeah.
Especially in the media age that we're in right now, where information is so fleeting. that it's just important to stay present, stay relevant.
Where do you see the business in 10 years?
That's a great question. So, I'm always looking for different opportunities, right? So in 10 years from now, I potentially like to see the business evolving in a different way, or, potentially partnering with a larger firm, taking a different route, bringing in more opportunities, more resources, bringing a larger team, or maybe just play golf for a living at that point.
It's a tough road. It's a tough road.
10 years. I can't look at the 10 years, but I continue to evolve over the next 1 to 3 years to find opportunities to create new relationships and continue to grow the business and add more team members, right? So 15 years ago, I had 1 employee. Now we have 17 employees that work in the agency. So I want to continue to create opportunities for my team members. It's like I work for my employees. Is kind of how it goes today. Is like, all right, I need to go find some business so that I can make payroll next month. Not worried about my own personal payroll. I'm worried about making sure that the employees get paid and we can continue to support and have a good culture within the office, which I think is important to me as well.
I think culture is really, really important. 10 years from now, though, you're going to be in the most expensive 4-year period of your entire life, which is 2 kids potentially going to college. And everybody's been saying college is going to be different. It's not going to be the expense. And hey, I put 4 kids through college. We said that too.
If I had sons, there'd be no college. I'd be like, you're getting right in the trades. Go get an apprenticeship with one of the unions and let's get to work. I'll help you start a business later.
Exactly. But like when you start to think about like a business, right? And you can see it because you've dealt with so many different businesses. The way we think about certain things really dictates the success of the business. Okay. And you can meet with somebody and realize that the way they're thinking is what's keeping them, I can't get more than a 3 or 4% growth rate. Right. And my philosophy has always been the levers in the business. And if you think about a profit and loss statement, you think about a balance sheet, those are all levers, and everything in there can be modified, which is going to be a ripple effect to your personal wealth or your personal tax return. And I think if people really think about it, is how can one move the levers in their business, in their thinking, to actually create the wealth that they want to do and simultaneously protect it, right? Because there's this mindset, and you hit mindset earlier. I'm a big mindset fan, right? Because I believe mindset dictates, pretty much the entire day. Like if you wake up with a shitty attitude, you're gonna have a shitty day. George Carlin had this great thing back in the day, and it just popped into my brain. It's like he goes to the grocery store, he's standing online, and the woman says, "Have a nice day," and he's like, "Well, by golly, maybe I've had 395 nice days in a row, and I'm ready for a crappy day," right? But like, people are in a crappy day every day, right? Businesses that are super successful are doing something different than business that in the same industry. Like you see people in your same business that aren't being successful, right? So it's the levers that you're going to move. Like the mindset is like protection is bad. Life insurance is bad. Umbrella is bad. Car insurance is bad. Liability, you just go through.
The insurance companies are out to get me. Why is it so expensive? All you banks are scumbags.
You just want to take my freaking money. Okay. And it's like, no, like the opportunity is like, if you move those levers and you free up money, my mindset always is I want to take the same premium dollars or less and get maximum protection. And I want to reposition money from other places that are being wasted so that I have that maximum protection. So now that I can build maximum wealth, because the forces that can take wealth away just from what we've been talking about today, and we just touched on things like how many people in the shore community when Hurricane Sandy came did not have enough money to rebuild their houses, did not have proper contents, did not have the majority of people, right? And like, people think about it from a flood perspective, right? And it's like, oh, flood insurance, there's, 2, 3, whatever, 300,000 from the regular thing. But there are companies that go $1 million, $2 million, $3 million.
Right.
Like, you have a $5 million asset that, the land is worth a lot, but you get another flooding thing. Is the land worth the same? I mean, will history repeat itself? I don't know. There is a point where it's like, this is a barrier island.
Right.
And it's going to stay a barrier island.
Sure.
Or we're going to rebuild it, right? But it's like, you just lost. This is the thing that I always think about. It's like, if I have $5 million in the bank and I have a $5 million house and I have a complete 100% loss on the house, I technically do not need insurance because I have $5 million that I can rebuild the house. But today I'm worth $10 million. If that event happens, I now move $5 million back over and I rebuild the house. I'm only worth $5.
Right.
So self-insure is bullshit. Like, it doesn't exist. And that applies to life insurance, that applies to disability insurance, that applies to, all the insurances that you help businesses with. Like, I'm not saying you go buy, the extended warranty on, everything that you buy, like the big sporting stores. Would you like an extended warranty? Would you like an extended warranty? No, my kids are going to break it anyway.
Right.
I don't need it.
It's funny. I'm stealing that clip. I'm just going to use it in all my marketing from now on forever. But yeah, it's the same. It's
creative licensing. Nothing is yours. It's how you adapt and take it and make it yours. Right.
Right.
That's what it is.
You credit people the first couple times you use it, and then you make it your own. Exactly.
You kind of twist the story a little bit, and it's yours, right? And that's like, but I really believe you're like, when you're on your podcast and you're trying to talk about the power of connection, the power of networking, the power of the who, the business is going to thrive through that. But if you think about it, if you're the individual listening to this conversation and you're thinking about your people in your life as bad who's, because they just want to sell me something or they want to do something, you need to find new people to do that, because the proper people actually are going to come in and go, we can save you $10,000, $15,000 a year and get more protection.
Sure.
We can look at something else over here, a lever, and go, whoa, that's wasted because the CPA is a freaking moron.
Right.
Okay? And you're paying more taxes than you should.
Right.
Why would you do that? Because it's easier? That's what I hear. Right? How many people right now are on extension?
Right.
So we have a big, beautiful bill coming, and we're on extension, and I don't know what the hell happened in 24. How am I going to be prepared for this in the freaking next 12 months?
I don't understand those extensions anyway, because you still have to pay your bill preemptively.
But you're like literally going to be in September or October and go, I now understand what happened in 24.
Right.
What can I do in 25? It's too freaking late. If I have a house fire today and I go and I call you tomorrow and you go, oh, you should have called me on Tuesday.
I've had that call.
I'm sure you have. How many times?
I've had that
How
call.
many times?
A handful of times. There's one that sticks out, and it was car insurance related. Guy wanted liability only, and we accommodated. We did it. A day later, can you add full coverage to my policy?
Right now?
I need comp and collision.
Right
I'm like,
now?
all right, when? He's like, today. I'm like, yeah, sure. What's up? He's like, we had an accident yesterday. I'm like, too fucking late. No, I'm not committing fraud on your behalf. You want to commit fraud, you go do your own thing. But, fraud is a big, nasty word in my space.
Oh, insurance fraud is ripe.
It's awful.
Ripe. I mean, think about the billions of dollars that are being sucked out of insurance companies, which is why they're like, hey, we just don't want to pay the claim, because is this claim real?
Right.
Or is it fraudulent? That would be a fraudulent claim.
Right.
And you would put yourself at risk.
Yeah. We see it all the time, and people lie on applications, they misrepresent. We had a situation where, somebody
People really lie? People lie? Holy shit.
Somebody didn't disclose something on their app. They had an accident, and then their insurance was canceled retroactively, for material misrepresentation.
Here's your premiums back.
Here's your premiums back.
Thank you very much.
And you're on your own for the accident. Good luck.
One of my mentors, a guy by the name of Robert Castellone, who was a titan in the wealth management space, right? And he used to have this frame of reference that he would put out that would be like, so your husband passed away yesterday or your spouse passed away yesterday. And today, you get to go to the insurance company and choose how much insurance you want. So the question is, like, do you really need to do a needs analysis? Do I need to calculate how much money that I actually need to replace my husband or my spouse's income?
Right.
Or is it simply the maximum? Like, is the question max, or like, I just need $1 million and I'll be fine? You'll sell one of these freaking houses and you'll be fine, honey. But I can get 20 million. Mm-hmm. Why would you take $1 million when you can get 20? Like, that's what people, that's the mindset that people have. And it's like,
we have that conversation when we're insuring property.
Because it's about the cost.
Right.
Because now I perceive I'm going to have less in my future because I properly insured myself.
Sure. I have that conversation. We lost a client because the insurance companies make a lot of those determinations. You don't get to choose as a consumer.
I want 20 million,
insurance.
but you only get 10.
Right. And, so we had somebody who's a large home. It was a 9,000 square foot home in Rumson. And
sounds nice.
Insurance company required it to be insured for $1,000 a foot, $9 million of coverage. Said, I can build this house for $5 million. I'm only buying $5 million of insurance. I'm like, you don't have a choice.
Yeah.
And I got fired for it.
Yeah.
But it's okay.
And some insurance company will take it because they want the premium dollars.
I said, your house burns down tomorrow. How much money do you want? You want 9 or 5?
Yeah.
No one's going to ever say 5.
Nobody's ever.
No one's going to ever say 5. They may say 5 in the moment just to try to be sneaky about it. Like, I only need 5.
Yeah.
But no, you want the 9 at the end of the day. You probably actually want 10 at the end of the day because you need to cover yourself to live somewhere else for the next 2.5 years to get your home rebuilt at a home that size.
And let's just talk about the underinsurance. Mm-hmm. Like, so you do underinsure your home. What happens when you have a claim?
You sell.
You have to sell.
You have to sell.
So if I was supposed to insure it for the $9 million,
right,
but I've only insured it for $5 million, I don't really get $5 million.
You don't get $5 million.
You get 50%.
You get a percentage of that. We're not doing complex math now, but
45 or whatever.
You don't get all of it because you chose to underinsure. You have a co-insurance penalty on your home or your business or your building because you chose to underinsure, right? So you chose to save money. Well, you're not getting that full $5 million back at the end of the day. And you're going to have to fight for it. And it's going to be a headache, all to save $1,000 a year.
So you think of it like in a wrongful death case, right? Mm-hmm. Like, so somebody dies in a car accident. And they look at the person and they go, oh, you make $500,000 a year, you're 40 years old, you're going to do that for another 20 years, 30 years, you're talking about 15, 20 million bucks. Mm-hmm. If I'm the attorney on the other side, it's like, well, you've chosen to insure yourself for $500K. Right. You have placed the value on your life at $500K, not 15 million. Why do you deserve 15 million if you only value yourself for $500K?
It's an interesting case.
Like, think about that for a second. And that's I really want people to think strategically because this is a decision that you don't get a chance to go back and choose what you want tomorrow, right? Let's go back to that. You don't get that opportunity. That's a fictitious bullshit thing that cannot happen. And you have to think about protection first, savings later, right? Mm-hmm. I can't drive a truck. Like, if I'm in business, and here's what people, like, this is the thing. Well, I have an LLC, and I'm going to be protected. Well, where am I getting sued from? How many people have rental properties that own them individually? And you got, 18 college kids shacked up in your rental property in South Providence, right? And it's like, there's a party every freaking night.
Right.
And somebody goes down on that. You're getting sued there.
They're taking all of it.
They're not only taking the house and any equity that's in the house and the rental income that's really premium rental income, they're taking everything else.
Mm-hmm. Yeah.
Like, let's get smart of how we protect things, right? So, there's so many different ways to actually do this, but I wanted to get in here today and have the conversation just to get a little bit of pain points, right? But I wanted to focus on the podcast, your podcast specifically, because it's focused on who's.
Right.
And I believe personally and professionally, when you surround yourself with really good team members, and there's core team members that you employ, but then there's a relationship mix, right? And that relationship mix is, who are the advisors that I have hired on my team, and who's serving as the coordinator of those advisors? Who is checking the process, right? And it's like, it is like, who is that? Like, who's in charge of your future? Who have you entrusted? And are they A players? Are they A+ players? Are they AAA players? Are they major league, minor league? Are they, hey, you got to go back to T-ball, right? Like, who are you? And like, people, I've picked up a whole bunch of new clients on the calendar year, and the common denominator is, do you have an accounting recommendation?
Okay.
Because I can't get any books and records out of my guy. He doesn't call me. He doesn't talk to me. There's no tax planning. And I'm like, 35 years of doing this? I've been hearing that for 35 years, right? It's not like you want to get professionals that want to work with you. And there are professionals that are geared for you, and they're geared for your future you, right? That's why I asked you, where are you going? Right? And I believe a really good business is constantly reinventing itself, but it's looking back at itself and going, are we structured properly? Do we have the right revenue mix? Do we have the right client mix? Do we have the right people around us? Do we have the right expense containment? Are we protected properly? It's hundreds of levers that you're pulling and pushing to make this plan happen. If I pull 5 levers, and I talk about it in wealth management, like, there's an assumption of the rate of return that one can make. There's an assumption of the tax rate that you're in. There's an assumption of inflation. They're all assumptions, right? If inflation is 5, not 3, does the plan work, right? If inflation is 7 and we assume tax rates were 30, but they're 40, and we assume we'd make 12, but we make 6, that's not even the same planet. Over a long extended period.
I'm a big fan of the, having the doomsday plan, right? What is the worst case scenario? If we're making a decision, what's the worst case scenario of the decision we're about to make, right? Not to think negatively about something.
But you gotta think about it.
Thinking about it as, what's the fallback? What's the next opportunity? Where does it go from here? I think is super important.
Let's wrap up.
Okay.
But let's have a conversation about what you want people to take away from this conversation, because this is a conversation.
I think it's, surrounding yourself with the right professionals, just what you said before, right? Having your team. I don't do anything myself. I do a lot of things myself, but I pretend that I don't do anything.
We have 3 who's
myself
in the room as we're recording this.
We have 3 who's,
and we're going to
here.
send a bunch of stuff to about 8 who's to get this stuff done, right?
Right. In the room, we have the right people. When I record my podcast, we go to a studio around the corner from here, and we sit down, we record, and we leave. They do the rest of the work, right? If I get somebody I probably have 97 emails and text messages on my phone right now on the other side of the room, or else I'd be checking it because my pocket would be by my wristwatch.
It's been buzzing.
Good.
It's been buzzing the entire time, right? But I'm going to take half of those and reconnect them with different people on my team to make sure we can manage it, right? So continuing to try to grow the business. I have people on my team that do a lot better of a job at different things than I do. And that's the best feeling in the world.
Every employee that I have is designed to do something much better than I do. So I can just do what I do.
It's a great thing, which allows you to do this and continue to create and learn and grow and share with everything that you do, and to continue to make those connections, I think is super important, right? We do business with people that we know, like, and trust.
Correct.
Right. That's a big thing. And I think that's part of this media game that we're in, is continuing to share that trust, that knowledge base, and that ability to connect. Because I get people that come up to me like, oh, I watched that episode with so-and-so. I thought it was great. I'm like, I don't even listen to it myself because I don't listen to my own podcast. But they just they found a connection through a YouTube video that we can then expand on and build a relationship upon.
We launched the day that we're recording this. We launched one on AI and with Jeff Woods.
I listened to it.
Right, and last night I got 4 texts from different people like, "Holy crap!" And I'm like, Yeah, that's exactly what it is. Hang on. Like, this is going to be a wild ride. Like, Jeff and I put out on that thing, like, I believe the business owner AI enhanced, the staff member, the team member, the who AI enhanced. We become better if we look at things as for not bad, for like, how do I become more efficient? How do I become better? How do I get rid of the errors and the omissions and the things that happen? And like, I forgot, like, like people forget shit. Like, how do we stop forgetting stuff? And like, how do we use our full, the full breadth of our capabilities.
Right.
That's what we're on.
It's putting your knowledge base into a GPT, right? We're using right now, we're building a notebook. We're using Google Notebook.lm right now and building out a knowledge base, which will be internal facing, which is going to get every podcast episode, every YouTube video I've done on product. It's going to get everything that we've built and created throughout the years. So team members can go in and search for, they can hit Umbrella and they're going to get a link to a YouTube video to send to a customer, right? Or they can hit Umbrella and they can learn, okay, what are the talking points on Umbrella? Okay, these are the things I need to remember, and can go back to it, or any other topic that they want to search in there.
Somebody's got a message. It's
building
like, Aaron did this podcast 20 years ago with Smallwood. Here it is. It's still relevant. Like, my goal is to make this stuff eternal.
Love that.
Like, there's stuff that we're going to do that's topical because, like, hey, you need to talk about certain things that are relevant so you understand it. But the essence is, can you wrap it with eternal knowledge? And I think, I've been doing this for 35 years, and the essence of what we do hasn't changed.
Right.
How we do it has changed, but the essence of maximum protection with the least amount of cost, maximum savings rate, maximum growth that we can get.
Right.
And, this exponential timeline is the wealth curve, right?
Right.
Every time you disrupt your wealth curve, and insurance is one of those things where on insurance, you disrupt your wealth curve, right? The potential of wealth is destroyed.
Right.
You go out and you spend extra money on something that you didn't need or want, then there's an opportunity cost. You get spoofed and you pay that $100,000 bill and you don't recapture it.
Right.
Not only have you lost $100K, but the future value of that. And that's millions. That's millions.
I didn't think about it that way.
Right? I mean, so like, if I spent $1,000 and it never happened,
right,
I'm freaking happy. I'm really happy. Like when I personally own disability insurance and I write the check, I'm hoping I never become disabled, but there's that fail safe, right? Like if I do,
absolutely.
Hey, the business is fine. I'm personally fine. I've got waiver of premium on my life insurance stuff. Like, poster child, I look good. Right? But I don't want any of that to happen.
Right.
But I'm willing to write the check for it because I understand the value of it because I've seen shit happen.
Right. I'm a big fan of the disability insurance. I'd rather pay that bill than life insurance because disabled, I'm way more expensive than I am dead.
Well, yeah, I mean, I'm working, there's a whole bunch of stuff, like we had drawn out the wealth curve, and we'll end here, but we had one of our clients in, and I'm drawing it out on a whiteboard before we actually put it to paper and stuff like that. And she's like, oh, I work for a law firm. And what I do is when somebody gets run over by a bus, I track what it's going to cost for that person to be cared for the rest of their lives.
Okay.
And that number the attorney walks in with on top of the pain and suffering, on top of all the stuff. And I'm like, oh, wow. I just learned something completely new.
Yeah.
Like that was 13 years ago. And I was like, I knew it on the surface. And then we dug in and I got more. Like it was just such a cool thing.
Now you use it all the time.
Now we use it all the time because it's like, that's just one aspect, right? So we can go on for about 8 days here. I say we actually do plan B. I actually go to your podcast.
Yeah,
we sit on your podcast and then we share our podcast with our networks because I think there's so much information that everybody can learn from and benefit from that we need to not, my dad said, my dad was my business partner. He's like, you got the greatest information, but we're shouting down a well. There's nobody down in the well. Nobody's going to hear you. At least on YouTube, like there's a couple million people that can hear us, right? Or billion.
Listen, I love
a few billion.
I love a part two. I love taking this to the next level and switching the seats and seeing which rabbit holes we can go down. So I look forward to it.
We'll go down a lot.
Yeah,
really
good.
An absolute pleasure.
John,
thank you. That was awesome. That was fun. Wrap it.